Good evening, friends. Is gold a safe haven forever in globalized investment markets? I think title itself is like gold, which fascinates every one of us, and particularly to young ladies when we talk of gold. In the though some changes have taken place in last few years in investment patterns, but the gold has remained a main investment pattern throughout India. Why India? Even throughout the world, but more so in India and more particularly in Gujarat. When we, even smallest family occasion, starting from, puja, then wedding and all this, we say, and particularly in certain communities, I have nothing against that community, they will say, Ketla tola sonu appa avse. That is how the things begin. Though things have started changing, but not to the extent we expected in last 50, 60 years. Only point here is that its advantages are there. That any time you can encash it. If you are in a bond, shares, it takes some time. But here, if you have gold of 10 tolas, you just walk in the reputed shop and you can cash same and get the money for the other purpose you want. Easy to maintain. It's not that if you see last many, many years, I can give an example. When my my parents got married in 1935, it was 36 rupees a tola. When I got married in 1967, it was 167 rupees a tola. And now, today I need not tell you the price per tola. So how the things have, changed considerably. According to me, I don't know Mr. Murthy will agree or disagree. This has remained, and particularly with our in Gujarat, a very safe investment in all respect. And if you look to the returns also, there are considerable returns to get out of it. But more, Mr. Murthy will tell us. I would like to introduce him because his biodata, his details are very long. But in nutshell, after completing Mr. Murthy his PhD in 1977-98 from Krishna Devaraja University, Andhra Pradesh, he joined the Technical Directorate of Institute of Chartered Accountants of India at Delhi. Over a period of 31 years, he has worked as senior faculty member at Institute of Chartered Accountants, Cost Accountants, Company Secretary, etc. He has worked in corporate sector at senior management level, including Vice President Market Creators Limited, Senior Vice President Calcita Futuristic Services. He worked as a consultant, offered various services such as training, project advisory services, marketing to leading companies like IOC, ONGC, GSFC, Bell Ceramic, etc., because list is very long. He is working as a professor and director of Parul Institute of Management and Research at Waghodia near Baroda, and also as a Dean of Faculty of Management, Gujarat Technological University, Ahmedabad. He carried out SAFA project on direct tax laws in SAFA countries. He has about 30 articles published in various journals of commerce and management, including IJC, Chartered Accountant. Survival and growth. And second international conference also he has organized on the challenges of globalized market, perspective of corporate, financial institution, government, education, etc. He is specialization in finance, strategic management, international economics. I hope that by the end of his lecture, let's see who succeeds, whether our belief, thinking that is gold is safe or otherwise. With this, I would like to welcome him. Before that, I request you to please switch off your mobiles. I will do it with myself first, and having done so, please show it to your neighbor that it does not ring subsequently. Thank you. So please welcome Mr. Murthy.
Thank you very much. Good evening, friends. It is an immense pleasure to be at AMA and the illustrious S.T. Parikh Convention Hall. Gold, as it is said, that Indians love to buy gold. Even the rest of the world gives up and sells gold, but there is one buyer in the entire world, that is India, which will buy gold. There is no surprise of the fact, despite the fact the demand for gold has depreciated significantly since April 2013, but Indians continue to buy the gold, and net sellers were the foreigners and net buyers are Indians. Like the FIIs were selling Indian shares, domestic institutions were buying Indian equity shares for a 2 months period. Now, why I have chosen this topic? Well, we need to understand one aspect. The value of an asset in monetary terms is not based on utility of the asset. For example, none of us can survive if there is no oxygen. None of us can survive if there is no air. But do we care for the air? Yes or no? We don't care for the air. There may be a polluting plant, factory near to your home, but still you feel, okay, no issue. You get along with that. The reason being the abundance air available. It is very critical for our life that we must have air. But still, since there is an abundance of supply, you get it free, so you don't care for it. The second most important thing that for livelihood, for human being to survive, is water. How many of us really care for water? How many of us put off the taps when the water is flowing? Yes, there are some, particularly who experienced the acute scarcity of water, and they feel every drop of water preserved today is going to be my lifeline. So, air and water, though essential for each one of us, we don't value it. Not because they are not utilized, they have a tremendous amount of utility, but they are abundant in supply. So, the monetary value of an asset is not dependent on utility. Please remember one thing. It depends upon the simple economic principle of supply and demand. If any asset which is to be used by us, which we perceive value, if it is freely available, we are not willing to pay the price. One consultant said, look at, if I come to you and say that I would like to do an assignment for you, you will say, will you do it for 100 rupees? You bargain like that. Whereas, this guy goes to the consultant and says, can I have your precious time of 5 minutes? They says, no, today I am booked. What about tomorrow? Sorry, I am very sorry. For the entire month I am booked. Then they say that, okay, I would like to pay 50,000 rupees for 1 hour. So scarcity has value. So we need to remember the principle of economics of Robinson. Said that it is the scarcity of the goods and services having alternative uses create value. The moment there is no scarcity, there is no value. For example, what I mean to say is we need to understand the fundamental principle underlying any asset. Love and affection. For example, we Indians are very lucky that we are recipients of love and affection from our parents, grandparents, great-grandparents, uncles, aunts, society surrounding. So we think that love is taken for granted. Affection is taken for granted. Look at the other hemisphere of the world, America. Most of the psychological problems that children face today in USA or developed world because there is no love and affection. There is no care. So naturally what happens is the kid at the age of 2 starts viewing the videos, start looking at the television. So they feel there is someone who needs to take care of them. So the underlying principle is very simple. Even if Bhagavan is visible to us every day, we think Bhagavan is useless. Since Bhagavan is not visible to us, so we think Bhagavan, we have to pray for Bhagavan. So it is good that Bhagavan doesn't appear before us every day. Now this talk actually, one is you buy jewelry for family. Jewelry buying for family, you don't look at very critically. Is the price I must pay or not? For example, you have occasions like being Gujaratis, we have every time before Diwali, Dhanteras, right? We have function, marriage, wedding anniversaries, birthday anniversaries. You want to give something valuable to your loved ones. For them, the principle of economics will not apply. Well, for them what happens is you try to decide whether should I buy today, should I wait for a few more days to buy it, nor should I buy 1 week before. So you try to time your decision of buying in case you are sensitive to the information available in the market. Otherwise, you would love to buy a ring for your daughter, for your son. You would like to buy the jewelry for your kids or sisters, like that. Right? So this is one significant section of the society. The second one is, earlier what used to happen, gold was not available in smaller quantities, in a quantity like 1 gram coin, 2 gram coins, 5 gram coins, 10 gram coins, like that. Earlier, when you go to a jewelry shop, that person will ask, sir, aapko kya jewelry chahiye, kaisa chahiye? Ring chahiye, kya chahiye? But those days, this systematized sale of gold was not there. So actually what happened was, people need to accumulate some amount of savings, then they go to a jewelry shop and buy. Today it is not the case. Banks, post offices, and many other shops, jewelry shops, they are selling gold in a very small denominations, starting from 1 gram to 10 grams, 1 to 5. So there are investors who are investing in that, thinking that, okay, I may need this amount of gold, maybe 10 years down the line, let me start buying every month, let me start buying every 2 months. This is not typically falling in the first category. Well, after 20 years, I may need that gold, which I can use it, which may come handy for me at the time of marriage of a daughter or son, like that. But it is a form of an investment. I used to save money earlier in recurring deposits, or I used to save money in the fixed deposit, then break that fixed deposit and cash it and buy gold at the time of function. Today I know I don't have to do that. I will buy it because there is a better return. The third one is speculation on futures and options. At least some section of the investor public quite convergent with the futures and options, so naturally they do. Then another is the consultants, those who would like to give advice to the consultants. Fifth category, like us, who don't have much money to invest, but we don't give consultancy on a regular basis, but we would like to do a research to find out whether it was doing research and can contribute. These could be the 5 broad sections of the audience. We may find this talk maybe a little sensible. Now we need to understand one thing, how the gold price is fixed, because normally we feel that gold is a price which is determined by the market forces. But it is not exactly, it is truly market forces, but it is being fixed at London. The London market fixes the gold, that is the London gold, Leo London gold, deliverable in London. It is to be deliverable in London. London PM fix is being referred. Actually, at what time it is? It is 3 p.m., 10:30 a.m. and 3 p.m. at London time. Now, how they do it? The chairman interacts with 5 major dealers. They give the quotes. At that quote, how many are willing to sell, how many are willing to buy. Based on that, if the quantity of gold willing to be bought is more than the quantity of willing to sell, that means the price has to be pushed forward. If the quantity of gold willing to be bought is less than the quantity of gold to be sold at the given price, then the price will be pushed down. That is being determined. Once that is being determined, the daily price is announced. That daily price is being announced in dollars, converted into the multiple currencies. So that is how you derive the gold price. Gold price is not determined in India. Gold price is not determined in any other country, but it is determined in London. And like you have the LIBOR, for example, LIBOR rate of interest. So those who are familiar with the investment markets, they know how the LIBOR interest rate is being fixed and what was the fiasco we had in the past. This is about the statistical data, which is of academic interest, but it is important for us to know that this is how it works, the Ecoving commercial statistical database being used. Now, many a times what happens is our memory is very short. How many of us remember the scripts in which Harshad Mehta invested, blowed up to 10,000, 15,000, later on they were pennies. They were worth pennies. Nobody was willing to buy that paper. How many of us remember that? So human memory is short. It has happened few days back, you still remember. After 1 month, you think, okay, it had happened, it seems. After 1 year, oh yeah, it happened. 4 years back, no. How many of us really know that gold really went down sometime in the past? For any price data, sensitive data, asset class in particular, if you want, particularly in case of minerals and metals, you have to consider the data for a considerable long period of time to understand its trends, unlike the Sensex. Unlike even currency. So if it is a commodity or a mineral or a metal, naturally you need to assess the data for a longer period to understand how the price trend is, whether the prices have fallen in the time. How many of us realize that gold prices depreciated at any given point of time? I think this is what. Well, I have considered data for almost 100 years. I thought that data of 100 years may be too long a period to be brought into an audience. Those who are interested to know, they can download it. I have kept everything data here itself. They can take the data. Because I believe sharing of knowledge, there are 2 things which you don't lose by sharing. One is laughter, by happiness. It appreciates by sharing it. The second one is knowledge. So everything is put on here. Anybody who wants, they can take this data. Now, the gold prices have declined before 2013 in 1976 by 20% in 1 year, 1982 by 8.6%, 93 by 4.48%, 97 by 8.43%, 98 by 14.4%. Right? In 2001, 2.27%. Now, up to 2001, there were periods, at least in range of 5 years, 6 years, there was a depreciation of gold. From 2002 to 2012, gold did not depreciate. As a result, what happens, it is a longer period, because 10 years is a period, very long period. People never thought gold ever will decrease. People thought gold will linear growth. For example, you talk to anyone in stock market investment. यार stock market तो जाता है, ऊपर आता है, नीचे गिरता है, वो तो चलता रहता है. You really don't know when it falls down, when it appreciates. But gold, no, it will never fall down. Talk about land, for example, land prices. People normally believe that land prices will always appreciate. No, it doesn't appreciate always. Because once you hold huge land, huge inventory of land, naturally there are no buyers at the given price. So naturally what happens? The prices will have to crash. Now what the real estate dealers are telling today, in Ahmedabad, I believe the land prices can crash up to a range of 10 to 11% if the banks insist upon the land developers to repay their loans. Same is the case with Bombay. Same is the case with many of the cities. So if there is an accumulated inventory available, bound to crash, irrespective of the fact which is the asset is. Go back to the basic principle. The basic principle is very simple. It is not who want to buy, but who want to buy at the given price. The principle of demand is the intention to buy at a given price, having the capacity to buy. I may aspire to have an aircraft. Murthy will not be included in the demand for aircraft. But Ratan Tata wants to have 5 aircrafts. Ratan Tata is included in the demand for aircrafts. So naturally what happens is, the demand means what? It is those who are willing to buy, having the ability to buy, purchasing power to buy at the given price. Someone is willing to buy, desperate to buy a house, but doesn't have money. Someone wants to buy, but wants to buy at a price less than what is being quoted. So naturally, the demand does not prevail at the given price. So those who are familiar with the basics of economics, my dear friends, never forget the fundamentals of economics, the basic principles underlying the principle, the basic common sense, right? So gold continued to appreciate year-to-year basis, 2002, 2012. Naturally, which I come to later stage, many investors, global investors, have taken long positions. So when the prices started crumbling down, naturally what you would do? You would like to sell off. You have taken a long position, you need to sell off. So this is what happened. And see, what is the appreciation it has given? 10 grams of gold, I think Vasab has given a long time back example. So in 11 years, it has appreciated by 537%, giving a simple average return, which is, I think, something around 44%. Now, gold prices started diminishing started depreciating in the year 2013. Now look at I have the entire data. From a closing price was 31,799 at the end of 2012. Remember, gold prices have not crumbled overnight. If you look at the daily data, gold price data, from January 2013, you understand that there was a resistance to buy at every level of price. When there was a resistance at every level of the price, naturally what happens is the price will not move linear. The price was moving, it was appreciating, but appreciating at a very, very lower pace. So that means the people who are willing to sell are there, but the people who are willing to buy are not willing to buy at that price. The number of buyers, the quantum of demand has gone down. As a result, what happened? From January 2013 onwards, gradually, the trend has shown that there was a resistance. There was no willingness on the amount of the buyers to pay higher price. Now, that is what happened in 2013, January. Opening was 30,860 and closed at 29,816. So, April 11, 2013 did not happen overnight. पहले बादल था, थोड़ा थोड़ा बादल था, फिर वो घनी बादल हो गई, then it started a cyclonic storm. It is not that there were no clouds. The clouds were just taking seeds. So from January 2013, it started declining. In Feb 2013, 29,856, declined to 29,534, marginal decrease in month of Feb. March 29,588 went down to 29,411, again marginal. came April 11th was like, October Black Monday. So the gold prices crashed very significantly. And May 2026, 895 moved on close to close. 26, 935, marginal increase in month of May. June, price declined from 26,897 to 25,565, 1,332. So 1st July it was 25,665. You observe there is a trend. I think those who are technical chartist experts, they say that the price lines indicate to us the trend which is following. This is how the trend has followed. Now, what are the reasons for the collapse? Why the gold has collapsed? First of all, we must understand, as I mentioned at the beginning itself, the gold prices are determined by the global factors that is being done at London. So they take into account the global. So the first one is Matt Phillips identified that there was 5 major reasons. The first reason was Cyprus. Now, we all know pretty well, I think I just go back to the previous slide. We all know pretty well that Europe is facing crisis. Barring Germany, to some extent France, there are many other countries are in the grip of the recession. In a recession means what? Symbolically, for a layman, for an ordinary person, what is the recession? The reduction in the purchasing power. That means individuals in the country having less purchase power to buy goods and services. Why they have less purchasing power? Because the earning capacity has gone down. What does it mean? That the corporate sales or the other sales have gone down and the profits have gone down. So in a grip of recession, what happens? Everyone is hit. It is not an individual, but it is also a company, but also governments. After all, governments are, in one way or the other, large investors, because they invest in banks, they also invest in various assets. They are also very huge employers in the sense they run some of the important services, some of the important industries. It is not that nationalization and running of industries by government only in India. It is there in Europe also. So naturally what happens is, being an industrialist, being an employer, being a financier, government is also hurt when there is a recession. So because of the Euro recession, what has happened is governments have become weak. When you cannot take a simple example. If my family requires, say, 25,000 rupees per month to survive in a normal way, my income goes down below 25,000. Now, actually, what I will do? I will cut down whatever the expenditure which I can cut down without adversely affecting my day-to-day life, my family life. When it goes down below 20,000, I start thinking of, okay, forget about luxuries, we need to cut down the comforts also. Right? So, because of the recession, what happened is the individuals have realized this is what in future, there is retrenchments, unemployment rate is going up. So people have started thinking that let us do one thing, we reduce our consumption and we try to save. Now, when you reduce the consumption, the demand for industry has gone down. So got into the recession. So we all know that the countries which were adversely affected, Greece, Iceland, Portugal, latest was Cyprus. Now, what it was said that telegraph, we all know the cloud, the readership base of telegraph and its news impact on the world. Telegraph mentioned on 11th April that Central Bank of Cyprus is planning to sell gold reserves. Now, when a central bank would be selling gold reserves, it won't sell 1 kilogram, 2 kilograms. It would be selling tons. So naturally, there was a fear in all those investors who had long positions. The prices are going to crash. Then the prices are going to crash. After all, all would not have bought on savings alone. They would have bought by borrowing also. When you know that appreciation will be 10%, you don't mind borrowing at 5%. We all know that rates of interest in Western countries are very less. For example, in some countries it is almost negative. So when the funds are available at a very low rate, negligible rates, as less as 1%, 2%, 3%, the rate of appreciation in gold is 5%, 8%, 10%. Naturally, what investors have done, they have borrowed at 1%, 2% and invested in the gold. When they realized that the gold prices may crash, so immediately they started selling off. The sale off has not started from India, it has started from West only. Right? Indians normally invest in gold conventionally. We invest gold not for sale. We don't buy gold for sale in a very conventional way. We think that it is meant for our family. Of late, we started investing gold as an investment. But in the West, it is not as a convention. It is not as a tradition. You might not be seeing any European lady wearing ornaments up to this level or up to this level. Have you ever seen? Only one chain will be there and one gold diamond. That's all. That's all about. But in our Indians, it is not the way. So Indians invest in, they buy gold as a culture, as a matter of culture, as a matter of convention, as a matter of tradition. Europeans and Westerners, they invested in gold as an investment. So naturally, when they feel the gold prices may crash, so they started selling off. So that put down the pressure. Now the second one was Goldman Sachs' recommendation is that it is better to sell off. It is the right time to sell. Sell call. We all know the clout Goldman Sachs enjoys worldwide. So when Goldman Sachs said that it's the time to sell off, then what people do? Whoever has got gold bonds, they started selling off. The third is, we all know today in the world, the driver of growth, engine of growth is China. It is, during last 1 month, American dollar is started stabilizing. Otherwise, China's economy is the driver of the growth, engine of growth for the whole world. Since China is the engine of the growth, when the numbers started coming, that Chinese growth is declining, is becoming sluggish, then people started that better we sell off the gold. There is one reason, the demand for gold has gone down. Not more than sell off, the demand for buying gold has gone down. There was a news item in Times of India that bearish coverage of gold. This is one. The fifth factor is when you buy physical gold and when you want to sell gold, there is some amount of psychological feeling, at least among Indians. When you buy a certificate and you want to sell off, there is a detachment. You don't see as a Lakshmi going bahar ja rahe hain ghar se. Because you don't perceive that something which is very valuable to you is going. It is a certificate, okay, you sell off. So ETF has also played its own role in that. Now coming to very important things, apart from being Indians, one is you hold it as hedge against inflation. There are two assets classes which always stand against inflation. One is the gold, the other one is land. Why? Because we believe that there is scarcity of land, population growth rate continuing at 2.5% annually. The land does not increase, available land. So there is a limited land resources. There is increased population. So naturally the demand for land will increase. The supply is more or less stagnant. So the land prices will appreciate. If not today, tomorrow. So you invest in land. Gold, we don't have many reserves of gold. India is the importer of gold. Most of our demand is met through imports. So the gold prices will continue to increase. So you try to invest in gold. So as a result, you fight against inflation. Inflation is 4%, 5%, 6%, or 7%. It could be 10%, 11%. As long as the banks do not give hedge against inflation, what a retired person can do. A person who has retired from service, a person who is become inactive from the business and profession, has money. He knows pretty well that keeping in money in the bank will give an interest of 7%. inflation is 10%. Is there any real interest? The real interest is minus 3%. The nominal rate of interest is 10%. Inflation is 11%. So the real interest is minus 1%. So what Reserve Bank of India is planning to do now? They said that one of the main reasons for people invest in gold is that they want a hedge against inflation. Now, Reserve Bank of India intend to come with bonds. They have already come, I believe, with one issue, which is wholesale price index. Now they want to come with consumer price index. That is linked up with the CPI. So you give an assured return of 3% or 4%, but the capital is linked up with the consumer price index. Since the capital is linked up with the consumer price index, naturally, any depreciation of rupee is taken care of. Say, for example, you have invested 10,000 of rupees. Today, rate of inflation is 3%. After 5 years, it is 10%. They calculate the CPI. Accordingly, the capital is given not 10,000, but adjusted against inflation. So there is one innovative measure that Reserve Bank of India sees that we should do it. Why they want to do it? Any reason? Yes, Government of India is not to do favor for retired people, not to do favor for investors, but it is basically, it is alarmed by the growing CAD, current account deficit. The current account deficit is so huge today, it is having negative impact on INR versus dollar. So rupee is depreciating against dollar very significantly. From 54 rupees, we have almost crossed 60 rupees. So Reserve Bank of India is thinking very seriously that how can we reduce the CAD, current account deficit. You have three major headings of imports. One is oil you require. You cannot get away with the oil. The second one is gold. Yeah, gold is not necessary for growth. Gold more of an investment. So naturally we say that if you want to curb the imports of gold, the one way you see that there is an alternative investment available as a hedge against inflation. So that is the reason why Reserve Bank of India decided we come out with consumer price indexed bonds so that those investors who are investing in gold as an investment, as a hedge against inflation are taken care. So that is the reason. The next one is less volatile than capital market. For that, I will show you the volatility of the market. Please remember one thing. Since 2001 to, this is, yeah. 2002, 3,377 was the Sensex, 0.28. 2003, it was 5,838. If you compare 2002 to 2013, the appreciation that Sensex has given is more than, almost equal to the appreciation gold has given. Gold has given an appreciation of about 547%. Now you take this one, 3,377 to 19,426, almost the same. Am I right or wrong? So in comparative terms, the investment in the Sensex scripts has given more or less equal return as compared to the gold. But you talk to the bunch of investors, ask them how you feel about investment in securities. You ask the housewives, but in particular ladies, how do you feel your husband invested in the stock market? How do you feel about madam? What is their response? So what they say is, नहीं बाबा नहीं, बहुत गलती किया था हमने ग्लोबल उसमें डाल दिया था, अपना पैसा गुजर गया, वो पेपर भी नहीं देखना चाहते हम लोग, रद्दी वाला भी बोलेगा भाई रद्दी नहीं चले गए. So even though comparative terms Sensex has given a return as good as gold, but the psychological feeling is negative about the stock market. Why it is so? Because of its volatility. Look at the volatility. It went on appreciating up to 2006, 13,000, went up to 20,000 in 2007. Those who invested it during 2005, 6, 7, they would have been jolly happy. You know, that 100 rupees has become 2,000 rupees. right? 1,000 became 2,000. 2008, it crashed. 2009, it appreciated. Again, 2010, and onwards, it crashed. So what would be the experience, psychological experience? Understand one thing, the markets are not driven by logic. Do you agree or not? Markets are not driven by logic always. If the logic is the driven factor, many of the scripts today which are available at a P ratio of 12 times to 15, 18 times, there must be people to buy. But it's driven by the psychology, what people are thinking about. So people in general feel investment in real estate, if you have enough money, is good, it will improve. Investment in gold is very good because the ladies feel very happy about investment in gold. Stock market, no, it is volatile. That psychological feeling is there. I go back my previous slide. Of course, third, as a matter of custom, we buy. The fourth reason is highly liquid investment it is. For example, even in case of a dematerialized shares, you want to sell it, unless you are conversant with, you have your own account and you do it fast, you still feel there is some amount of, could be illiquidity because you want to sell it, but there must be a buyer to buy it. You have a demat account, the share is dematerialized, the script is very good, you want to sell it at the given price, but there must be buyer. There is no buyer to buy it. It is not the case with gold. So you want to sell a gold, there are 10 buyers to buy it at the given price. So another thing is the liquidity of investment. Land, for example, ordinary investors, ordinary people, middle class people in particular, who generate a lot of demand for gold, they can't buy land by taking 50,000 rupees, 1 lakh. They say that 1 square feet land in Bombay is something around 4 lakh rupees. In Ahmedabad, it is about 18,000 to 15,000 rupees. So you cannot really plan to buy a land. You can only plan to buy a flat. So naturally what happens is, though land is liquid, in the sense that you cannot sell it immediately, registration procedure will be there. You need to, first of all, verify you have bought land, whether the title is valid or not. I think we always see newspapers. In Baroda, we have been seeing a newspaper stating that the land which was sold, they said the title deeds were not correct. So collector said that all the sales deeds must be cancelled. Right? You really don't know the title clearance, whether the title is valid or not, so legal problems. So one is the quantum of investment required. The second one is the title clearance issues, whereas gold is not that. You want to buy 1 metric ton gold, you can buy and sell it. So that is the thing. Fifth, of course, since there is no legal mechanism through which the department can really catch, unless they do a search and seizure of the house. Income tax department doesn't have any mechanism through which they can tap the black money, invested in the gold. In the land, to some extent, they can check the records, but gold is no record available. Right? So large amount of black money moves into the gold. That is also another reason for appreciation. So that is the reason why people invest. Now look at the inflation. I think please have a look at the inflation. How has been the figures? We had double-digit inflation almost starting from 2009. We were almost double-digit in 2008, 8.32, not very far away. So this answer is driven the reason hedge against inflation that I already covered. This is the volatility. Now what is the appetite for the gold? How much gold people buy? India solely contributes for almost 1/3 of the gold purchased in the world. Now this is not the statement by any individual, it is by the World Gold Council. If you look at the World Gold Council website, it says depreciation of the gold could be averted by the appetite of Indians for gold. That means if any crash in the gold, if it could be averted, it is only because the appetite for gold by Indians, right? I think the second sentence is the same, similar to that. Now, how much we have likely to import? See, in the first half of 2013, 615 tons of gold has been imported by India, as compared to 381 tons in a year ago. That means 2012. Look at the difference, how much Indians have bought more during 2013 as compared to 2012. So this gives you an idea that whether you should buy gold or not. How much gold is imported? India imports about 1,200 to 1,600 tons of gold annually. Now, what is the quantum of business India does? It is 1,78,000 crore, which is the gems and jewelry. Having given the background of history, how we can plan, one area where an ordinary individual can plan to buy gold is through the gold exchange traded bonds. The gold exchange funds are being operated by many banks. You have a long list actually. Now, you have some surplus you want to buy, you don't have to go to jewelry shop and buy, you can buy a gold exchange traded fund. So, whenever you want to sell it off, they give equivalent gold as per agreed terms. So, without buying the physical gold, because nowadays I think Gujarat earlier was not known for the burglaries, thefts. Nowadays you hear every day whenever you open up Times of India, you always find one death, a couple of deaths here and there, and also a couple of burglaries in Ahmedabad, Baroda, Surat. Some old couple have been killed for want of gold, and their children are elsewhere in abroad. So you want to get rid of the burglaries, you want to get investment in gold. Gold exchange funds are the best ones which you can invest. I have just given a few of them. There are many ETFs available. So you can invest even 500 rupees, 1,000. There is a exchange wise, 1 gram, 5 gram, 10 grams like that. You can invest. Now, people would like to know, okay, Mr. Murthy, you have said something about the past. We want to know something about the future. Whatever I am saying, please ensure that it is only what people have said. My Times of India's report says it could stabilize around 22,000 to 23,000. Sometimes some people ask me, Mr. Murthy, what do you feel about Sensex? I feel that there is a support level around 18,000 Sensex, and there is a resistance level around 21,000. So similarly, I think you might have seen last couple of years, the market was going down just about 18,000, crashing. Then people start buying. So the resistance is around 18,000. And market is going about 20,000, then again it starts declining. 21,000 is in the broad range, it is moving up. So what Times of India says is that it could stabilize between 21 to 20,000 rupees before Diwali 2013. Diwali, we all know, we have a lot of appetite to buy gold around Diwali. Take it for granted, October comes, the gold prices will shoot up. Even if the world gold prices trend is negative. Why? Because the demand for gold from India will be much more than the sale from abroad. So naturally, October comes, the gold prices will have to shoot up. Now, this is the Bank of America, Merrill Lynch also said. Now, having said in the beginning that the gold is linked up with the global markets, please understand one thing. Though we are 1/3 of the gold, physical gold we buy, but if you look at investment-wise, the major investors in the gold exchange bonds, funds, are not Indians. They are Europeans and Americans. Now, when you make an investment in gold, in a bond or a fund, it is as an investment. So it is denominated in the dollar, right? Gold bonds, it is in gold. In other investment, it is dollar. Pretty long time, dollar has depreciated. So when dollar was depreciating, people are investing in gold. There are innumerable research studies have been undertaken by professors, some of them are Nobel laureate. They found that people invest in gold particularly in the West, Europe and America, as a hedge against dollar, in the sense that if the dollar is going to depreciate, then they buy in gold. When the dollar is appreciating, automatically they sell off gold and invest in dollar. Right? So this is a simple mechanism. The studies found that whenever the dollar is stabilizing, dollar it will appreciate, the gold market go nose down. You might have seen the reports, dollar is stabilizing, US economy is stabilizing, it has registered a growth rate, its unemployment rate has gone down, and also the dollar has appreciated against almost all major currencies. Unfortunately, Indian currency, Indian rupee has depreciated most. So naturally, the natural corollary logic is, since dollar is appreciating against the major currencies, as per the research reports, the gold is bound to depreciate unless there is some major shakeup. Now, these are the major conclusions. First one is gold prices are determined internationally in US dollars, that is in London. We need to understand the truth that gold is also like any other commodity. So prices can move downwards. There is a strong international relationship between gold and US dollar returns. Though gold prices are mentioned in Indian rupees, but they are driven by global markets. Gold is also held as a hedge against inflation. There is an inverse relationship between the stock market. Stock market here, in sense, let me spend a couple of minutes. It is international stock markets, whether it is New York Stock Exchange, right? Or Nikkei, that is the Japanese, or Hong Kong, or Chinese. The international stock markets, their indices are going down, then gold prices tend to have an increase. But the research studies found there is a relationship, inverse relationship. That inverse relationship is not as strong as gold versus dollar. Am I clear? Yes, whenever the stock markets becoming bullish, in the conventional word of bullish, when the stock markets tend to become bullish internationally, the bullion market tend to be bearish. But the inverse relationship is not very strong as much as between gold and dollar. Okay. So strong US dollar, better investment climate in US, possible liquidation long position ETFs may lead to depreciation of gold. That is what says, but experts differ. This is the overall picture that emerges from my research on gold, vis-a-vis the investments in the stock market and elsewhere. If you have any questions, you are most welcome. Thank you very much.
Friends, having known and understood by us the economics of the gold, but gold will always remain gold. So that is going to remain in the Gujarat, India, wherever it is. Our attachment and sentiments are so much attached to the gold that whatever be the prices, we are going to buy. Let's hope that again, Mr. Murthy has predicted, I hope it comes true to some extent, that up to September end the prices will come down to 20,000 or 25,000, which is 26 and odd. But that we don't know today. But let's hope that something will come down because the government wants it to come down. But another route, as he rightly mentioned, that the gold smuggling will start as used to be happen quite some time before. Friends, we had a very good discussion by Mr. Murthy, and I request all of you to complete the feedback form which is available with most of you so that it will help AMA to devise similar programs in the future. With these words, I would like to thank Mr. Murthy with our small memento. Please give him a big round of applause.